800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
You're tuned in to Money Matters Boston, 1120 AM WBNW. This is WBNW 1120 AM, the Money Matters Radio Network. You're tuned in to Money Matters Boston, 1120 AM WBNW. This is WBNW 1120 AM, the Money Matters Radio Network. This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM-FM. Concord, Boston, the Money Matters Radio Network.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Mark Vonner is the CEO of Veterans Development Corporation. Mark is a career military man, having served for nearly 20 years, and we are so thrilled to have him and his company as a key partner and the presenting sponsor of the DAV 5K Boston. Mark comes from a proud military family, including his father Victor and his brother Timmy. Mark talks often about how serving his country was one of the greatest achievements of his life, and that's one of the key reasons that he chooses to give back to this special community. Mark is honored to continue his legacy that his father started when he built Veterans Development Corporation. Working to help many disabled veterans and their families has become a lifelong goal for Mark, and it's why he's taken the time to fully support the DAV Department of Massachusetts. You can join Mark Vonner and Veterans Development Corporation and help our great American heroes today by making a donation or becoming a sponsor. Simply visit dav5k.boston. That's dav5k.boston.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled Inflation and Your Retirement Plan. Mike, why is it so important for retirees to account for inflation in their planning?
Yeah, massively important, and I think any retiree over any course of history will tell you that. And when you experience inflation, when you're on a fixed income, it's tremendously difficult. But even small changes in the rate of inflation, or seemingly small ones, can really lead to massive changes. For example, if you're facing 2% inflation, that means that prices roughly double every 35 years. If you're looking at 4% inflation instead, those same prices double only in 17 years. A huge change to your budget.
And obviously, this also then influences influences, your overall spending habits and your withdrawal rate over time. These are things that you have to account for in your planning. You can't just assume that you're going to necessarily see the same kind of inflation that you've seen previously in retirement.
Yeah, look, I think generally speaking, over the course of the last 20 years, while there have been massive drawdowns in equities, the inflation figure has remained relatively stable. If you're worried about something that could look different from that over the course of the next 20 years, then it's important to really consider what that would mean for you.
Our guide this month is titled Inflation and Your Retirement Plan, and there are two ways you can request it. The first is by calling 800-393-4001, or you can request it online at armstrongadvisory.com. That phone number again is 800-393-4001, or request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We pride ourselves on being able to support veterans in their time of greatest need, ensuring they receive the protections they deserve. For over 100 years, the DAV of Massachusetts has helped thousands of veterans with housing, transportation, and medical assistance, and you can help too. Please visit dav5k.boston and make a donation today. That's dav5k.boston.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Chuck, Mike, and Tucker with you here on a Thursday. Quite a bit of economic data that we received this morning. Also a little bit of follow-up on some of the big moves from yesterday, most notably Oracle's 35% jump. And we'll be digging into that. We'll be talking about nice little swath of IPOs this week as well and what that may mean for the market. But we begin with the two pieces of economic data that came out this morning. At 8:30 a.m., we received CPI, Consumer Price Index data from the Bureau of Labor Statistics. We also received weekly jobless claims data from the Department of Labor. Michael, where would you like to begin?
I don't know, Chuck. Neither of them are terribly good. Let's, I guess, start with the bigger one, the monthly release of inflation on the Consumer Price Index front, which showed a slight increase from where we were last month, after where we were last month was kind of getting a little bit uncomfortably high. So running through the details here, we saw headline CPI jump up 0.4% compared to last month. That's the doubling of the rate that we saw in July. In terms of where that came from, though, a lot of it was food and energy, and so when you strip that out, we're about tied with where we were last month.
No, we're not.
0.3% month over
versus
month. Versus
0.2.
July core, I think, was 0.3, Chuck.
I'm looking at it right now. It's 0.2.
Really? Okay.
I'm looking at it right here. July and June were both 0.2. Unless the BLS report is lying to me.
The BLS report is probably lying to me, or my numbers are wrong. Hold on a second. Yeah, you're right. All items less food and energy were up 0.3% in the month of July 2025. 0.2 the June.
Let's see. What line am I looking at? Oh, sorry. I'm looking at just goods.
Yes, I was
so
right
goods
for once.
accelerated.
See that? Guys, mark
All
the
right.
tape.
Do the rest of the show.
Is there tape? Do we mark it anymore? So in either case, whether we're 0.2 or 0.3, what we're seeing now is inflation for the last 3 months at least accelerating a little bit from where I think our comfort zone might be. And this has been nothing new, Chuck, right? We've been sitting around this 3% level for a few months now. But if you take the last 3 months, you're heading closer to that 3.5 level if you're going to just average the last 3 months. And so the question is, how much longer does that continue? And it also speaks to probably a lot of unhappiness in households, because where a lot of that inflation is coming from is food and energy inflation right now. Energy, I think people probably have less issue with given where gas prices are, but on the food side of things, that's a pretty quick pace if that continues.
Yeah, the interesting thing on the food side, I've had a number of people in the last month or so ask me about what's been going on with grocery prices. I've been like, well, what do you mean? And they're like, well, I'm seeing, higher prices in a number of areas. And I'm like, well, can you tell me more about what it is that you're seeing? I'm trying to get a sense of, hey, is this one area? Is it, spread out? And the thing that I've been hearing from them is, hey, this is showing up, predominantly for them on the produce side. That's where they've been telling me. It's beef prices are up. We've covered that at length, but they're telling me, hey, this is happening on the produce side. And so I looked in the data here to see what we had, and the unadjusted percentage change for July through August was 1.2% for the month on fruits and vegetables. The seasonally adjusted was 1.6%. So this is one case where the anecdotes that I've been hearing mesh with what we see in the data, which is one of the fastest, rising areas of food prices is on the produce side. On the other side, like eggs are flat for the month. There's no change on that side. Beef continuing to move up at a fast clip now. Beef prices are up 13.9% year over year and 2.7% for the month. Continuing to just see that moving forward at this point. But what we're seeing on fruits and vegetables is a new thing. For the full year, they're only up 1.9% year over year. But now you've got this 1.6% in a month, and it's basically saying, hey, all of that growth in fruit and vegetable prices happened in August. Is this going to be something that continues, or is it a one-off? The Fed doesn't care about food and fuel price changes, not because they don't care about human beings. It's simply because they're not often indicative of long-term shifts that tend to stick around. For an example of this, look at egg prices. They went up really sharply for about 6 months and then came down really sharply for about 4 months. And so it's not something that tends to have sticking power, usually because it's because of transitory factors, a bad harvest, a bird flu, this, that, whatever. Those things don't tend to stick around generally.
Right.
With fruit and vegetable prices, we can look at some of the things and say, okay, is there anything that's potentially longer term here? And the one thing that I do come back to as something to potentially watch, it's not a definite thing, is when we talk about the illegal immigration crackdown. A lot of folks who are not in the country legally tend to work in the agriculture area. Yeah. And so you wonder if this is driving up labor costs for farms and things like that, and potentially reducing supply of fruits and vegetables. And so it's something that I put on my card just to monitor. I'm not saying that this is going to happen or not, but just, hey, let's pay attention to this and see if it becomes a trend. Right now it's 1 month in the data. That's not really worth, getting too excited about. But let's see if this becomes something that has staying power, or if this is just, a one-off and then we kind of go back to where we were.
Could it be tariff related to? I'm thinking about my grocery basket and what goes in there, and when it comes to fruit and vegetables, bananas, oranges, avocados, these are not things that are grown, generally speaking, in the United States. I don't even know off the top of my head, though, if bananas and avocados are subject to tariff right now. I believe they are.
They are. So in terms of, what you see here, some of this could be tariff related, like bananas up 6.6% in the last year, 2.1% in the month. So maybe, because quite literally we don't grow any bananas in the United States. Right. It's just that they don't grow here. Other things that we do grow in the U.S., lettuce is an example, up 3.5% for the month. Tomatoes up 4.5% for the month. But some of these can be explained by transitory factors. Yeah. Tomatoes, just as an example, you look at it, and at least in the Northeast, talk to anyone who's put tomato plants in their garden this year, it's been a brutal harvest because it's been so dry. Just hasn't been much that's been going on there. And this is not just a New England thing. You look at, other areas of the country that grow them, and they're facing, the same problems. So this is why I look at this and I say some of this could be transitory, some not, but you got to kind of watch and see. The stuff that is, more troublesome is the stuff that's not going on here, which is, hey, the hit to used cars and trucks is starting to show up the last 2 months, up 0.5% in July, up another 1% in August. So you're starting to see that seeping in. Things like apparel, that is now showing, signs where the last 3 months we've gone and basically averaged 0.35% for apparel. So that's running at more than a 4% annualized clip. Other things that we saw, this one that I don't think will stick around, and this bodes well for next month's inflation report. Shelter cost up 0.4% for the month after back-to-back ones at 0.2%.
Right.
There's not really anything out there to me that points to that 0.4 being sustainable right now. We'll have to kind of watch and see how it evolves. Transportation services up 1%. This is something where you're starting to see a little bit of a rebound in airfares, the reason being airlines have finally gotten to the point where they've cut the capacity that they think they need to, and so now they're raising prices on the remaining capacity because they don't have to try to fill as many planes. So that could have some staying power potentially. But overall, I think you look at this report and you got a couple new things to monitor. Again, the food situation is new, and so you say, okay, let's see if there's something there, but it's 1 month. But overall, I don't think it's dramatically out of line with what we've seen for the last several months, which is inflation, particularly core inflation, still running a little bit elevated. But given the situation in the labor market and how things may be worsening there, the Fed, I think, could be, quite honestly, I go stronger that the Fed is completely justified in beginning to move forward with rate cuts next week. And so let's take a quick break, and when we come back, let's talk about what we saw from jobless claims, and that will dovetail nicely into a discussion of the labor market and the Fed.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Subscribe to our page and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network. This month's free guide from Cushing & Dolan is called IRA and Life Insurance Planning, Estate Tax Strategies and Nursing Home Protection. Learn how naming your estate a beneficiary can reduce estate taxes, protect assets from nursing home costs, and avoid the 5-year Medicaid waiting period. Call 866-848-5699 to get your free guide today, or request it online at LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Mark Vonner is the CEO of Veterans Development Corporation. Mark is a career military man, having served for nearly 20 years, and we are so thrilled to have him and his company as a key partner and the presenting sponsor of the DAV 5K Boston. Mark comes from a proud military family, including his father Victor and his brother Timmy. Mark talks often about how serving his country was one of the greatest achievements of his life, and that's one of the key reasons that he chooses to give back to this special community. Mark is honored to continue his legacy that his father started when he built Veterans Development Corporation. Working to help many disabled veterans and their families has become a lifelong goal for Mark, and it's why he's taken the time to fully support the DAV Department of Massachusetts. You can join Mark Vonner and Veterans Development Corporation and help our great American heroes today by making a donation or becoming a sponsor. Simply visit dav5k.boston. That's dav5k.boston.
Are you wondering where the economy is headed? GDP is growing, but tariffs, inflation, and job numbers are making headlines. Interest rates, housing costs, and policy changes are impacting all of us. Even AI is changing how markets move. Hi, this is Chuck Zodda from the Armstrong Advisory Group. We're hosting 2 financial seminars this fall to help you make sense of it all. Join us at Margaritaville Resort, Cape Cod on October 9th or at the Showcase Superlux in Chestnut Hill on October 16th. To reserve your seat, call 800-393-4001. We'll break down the economic trends, market risks, and smart strategies you need to plan for retirement and beyond. Diversification, preparation, and smart decisions are several of the keys to navigating uncertainty. Register today by calling 800-393-4001 or on our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you by the U.S. Virgin Islands Department of Tourism. Looking for a getaway that's easy, warm, and unforgettable? We'll discover the magic of the U.S. Virgin Islands, St. Croix, St. Thomas, and St. John. Just a short flight from New England with no passport needed and no money to exchange. Soak up the sun, stroll along white sand beaches, and feel the rhythm of the heartbeat of the islands. The USVI is America's Caribbean paradise. Plan your fall escape now at visitusvi.com. That's visitusvi.com.
Mike, final note just on the inflation data before we get to jobless claims.
Yeah, please.
Big thing that we are seeing here is that if you look at this in terms of 2 components, services and goods, and specifically core, like this, like toss the food stuff away just because it's not what the Fed cares about, because a lot of that tends to be transitory.
Yep.
Core services inflation is basically running at 3.5% right now, and has been at 3.5% for the last 4 months or so. Core goods inflation, which was around -2 in Q3 of last year, started to inflect upward then. So even before any tariff stuff, this goes back, a full year now before tariffs or any of that. Core goods started to inflect up, but have accelerated up recently, and now we're closing in on 3%. And this is kind of the whole crux of this is, look, inflation kind of bottomed in the high 2s on the core range. Because of core goods falling, while core, services were still elevated, around 4% and declining slowly. What we're seeing now is not much progress being made on core services, but core goods accelerating up. And so I think it gets to the point where, you sit here and you say, okay, all of the data out there is consistent with probably low 3s core inflation, so low 3s long-term inflation, and for whatever reason, one reason or another, I'm not saying this is good, bad, or anything else, I'm just saying it is, the decision that's being made by the Fed and basically by markets right now is, hey, it's okay that inflation's going to be a little bit hotter. We got to deal with the unemployment question first.
Yeah, that is the trade-off that's being made. it really raises an interesting question of how much can they actually cut in an environment like this. And I know that big bets are being made right now on a lot of them, but it becomes challenging on inflation reports like this.
Yeah, and the other interesting piece that I'll point out, if you look at the 2014 through 2019 period, so before anyone was like really concerned about inflation and before it was a thing, if you look during that period, core services typically was running at about a 3% to 3.25% annualized clip. Like that's where it tended to land. Core goods was typically seeing about 0.5% to 1% deflation on an annual basis.
So you think about technology
and that's how you got
products.
to 2.
You got tech coming down and getting cheaper. You've got
used cars, things like that.
All sorts of that stuff just moderating or coming down, generally speaking, in the 2010s.
And that's how you got to somewhere around 2% inflation. Was services ran around 3, goods ran slightly negative, and that's how you got there. It wasn't just that the Fed doesn't try to make every price grow at 2. They try to get the whole thing with price stability somewhere around 2%. And generally, the mix that we saw in the 2010s, services ran about 3 to 3.5%. Goods ran negative 0.5% to negative 1% each year.
TVs got cheaper, vacations got more expensive.
Yes. Let's talk a little bit about the weekly jobless claims number. So here's what we saw. Weekly initial claims jumped to 263,000. That was a jump of 27,000 from the prior week. And this starts to get into, hey, I think I said last week, if you start to see 3-4 weeks in a row above 260, that's where I start to get concerned. You've got one now. So I'm still not quite concerned for a couple reasons. The first is obviously it's 1 week. So anything weird can happen in 1 week. Second piece, it looks like something weird might have happened this week. Texas, for whatever reason, saw its weekly jobless claims jump from 16,000 to 32,000. Now, this could be a case where you say, okay, the oil industry has announced a bunch of layoffs recently. Maybe this is, showing up there because Texas is oil country. We've talked a little bit about what's going on in agriculture. Maybe you're seeing some signs of things there. I don't think it would show up in new unemployment claims, though. More, hey, we need to hire more in the agriculture sector. So I don't think that clicks. But I think ultimately there could be something weird that's just going on with the Texas data this week, kind of like when all the New York City school bus drivers got laid off a week later than normal in the spring because of, when the school calendar fell, and so we saw a 1 week jump there. It could be that. Other things, remember, this is right around Labor Day. Labor Day moves around from year to year. Maybe there was something weird with the seasonal adjustments, things like that. So I don't know that I necessarily make anything of this 1 week yet, other than to say, hey, if the next couple weeks come in at these levels, around these levels, or higher, okay, now we got something that we got to talk about.
Taking this in context with last week's jobs report, I mean, how do we contextualize the overall state of the labor market for the Federal Reserve members in terms of how they're looking at it, right? I mean, it's one thing for us to contextualize it, but what really matters in the short term is how the Fed is thinking about it. You did see an uptick in the unemployment rate. You saw a pretty weak job creation number, and then was it yesterday that you got the annual revisions in there with Tuesday? Okay, yeah. So 900,000 fewer jobs actually created over the course of the last month with those revisions.
No, that was that was 2024 and early 25, not over the last month.
Last 12 months.
Yes.
Yeah. Sorry, did I say last month? Yeah. Okay.
Yes. That would have been really bad. Then the Fed's got to cut by 2%.
So over the last year, fewer jobs created than was previously understood. How is the Fed contextualizing? Again, I don't think that any of that has much to do with today's jobless claims number. That would have to be a story that continues for a few weeks. But with all of this context, I kind of do get to where they are seemingly pointing, which is we do have to overlook this inflation data because there is significant weakening on the labor side.
And this is where the breakdown that I just gave, I think, kind of puts it all into how they'll think about it. They're going to look at core goods and say, hey, that's because of tariffs. And once those tariff price increases come through, core goods is going to go back to doing what it used to do, which is 0.5% to 1% annual decline. Core services might be plateauing around 3.5%, but it really only needs to get down to 3 to be where it was before. Great, we can do, that'll probably happen over, the next year or so. On the other hand, the labor market, once it gets moving in one direction, the only thing that tends to stop it is an intervention, and so we need to intervene is what the Fed's thinking. And I don't think that thinking is wrong, provided that this is what we continue to see on the inflation side. I'm not saying that 3.25%, 3.5% inflation is good. What I'm saying is it's not worsening, but the labor market is.
Right.
And in a situation where neither side is really where you want it to be, you've got to deal with the problem that is worsening first and then move on to the other one. And I think that's totally defensible. And if I were on the Fed, which no one would ever want me there, I'd say, yeah, we got to go 0.25% next week, with plans to maybe go heavier in October if the labor market worsens further. Quick break. When we return, it's Wall Street Watch.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. One of the biggest risks to retirement isn't just market volatility, it's longevity. People are living 25 to 30 years after they stop working, and that gives inflation plenty of time to work against you. At just 3% inflation, your expenses double in about 23 years. Add to that the fact that healthcare costs typically rise faster than general inflation, and your later years could be your most expensive. Without a plan, that combination can put real pressure on your savings. That's why we've put together a brand new guide called Inflation in Your Retirement Plan. The guide shows you ways to balance longevity risk with rising costs and strategies that may help you make your money last through decades of retirement. Call 800-393-4001 to get your free copy today. 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva with the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke, a partner with the law firm of Cushing & Dolan with a master's in taxation. And today we're talking about choosing beneficiaries for your IRA. Todd, what is the best way to deal with qualified retirement plan assets, and can they be transferred to these irrevocable Medicaid trusts?
So this is a tough asset in general. When you're dealing with retirement plan assets, it's difficult from an estate planning standpoint or a Medicaid planning standpoint to deal with them. Why? Because they have both an income tax component and an estate tax component, right? They're taxable when you take them out, and when you die, they're subject to your estate tax. So the general way to do this would be, one, you can name the spouse as the beneficiary of the IRA, or you can name the kids the beneficiary of the IRA, or sometimes you can name the trust the beneficiary or the estate the beneficiary. But it all depends on the size of your estate, the size of the IRA. But the one thing you really can't do is you can't take the asset and transfer it to the irrevocable trust or revocable trust while you're living. Otherwise, it will create a income taxable event. So tough to plan for those in advance unless you name the estate the beneficiary.
Educate yourself about the estate planning process. Request your free copy of Todd's brand new guide called Why Name Your Estate an IRA Beneficiary right now by calling 866-848-5699. That's 848-5699, or you can request a copy from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Market's seeing a nice little bump today as Wall Street reacts to a key inflation measure posted this morning where the Consumer Price Index increased 2.9% on an annual basis, in line with expectations, yet hotter than July's gain of 2.7%. Jobless claims data also came in slightly above estimates. Right now, the Dow's up just over 1% higher, or 507 points. S&P 500 is up 0.6%, or 43 points higher. NASDAQ up just over 0.5%, or 119 points. Russell 2000 is up nearly 1%. 10-year Treasury yield down 3 basis points at 4%, and crude oil is down nearly 2% today, trading at $62.50 a barrel. After its best day since 1992 on the heels of its optimistic AI revenue projections, Oracle's shares are slightly retreating from yesterday's 36% surge, down 5% today. Separately, the Wall Street Journal reported it struck a $300 billion cloud deal with OpenAI. Meanwhile, recent meme stock Opendoor jumping 54% after the online housing platform named a top Shopify executive as its next CEO elsewhere after its 3% pullback yesterday following an overall underwhelming product event. Apple shares are up about 0.8% today. After a successful IPO yesterday where shares jumped 14% in its debut, shares in the buy now, pay later platform Klarna are falling 2% today. Kroger climbing nearly 1% after the grocery store chain posted mixed quarterly results where it beat earnings expectations but fell just short of revenue estimates. And energy drink company Celsius is climbing about 3% after Goldman Sachs gave the stock a buy rating, where the bank said Celsius has posted strong growth and is in a quickly growing category. I'm Tucker Silva, and that is Wall Street Watch.
Mike, anything else that you want to cover as it relates to any of the economic data from this morning?
No, I'm sure it'll seep through to other stories as the day goes on, Chuck.
All right. So, now that we've gotten that out of the way, let's talk about next week's Fed meeting because, gosh, it's going to be exciting.
Fireworks.
It actually really won't be that exciting. I think we kind of know what's happening. The piece that is interesting, Lisa Cook is going to be back and present for this Fed meeting. The Supreme Court did agree to hear the Trump administration's appeal related to her firing being denied by a lower court. Was that late last week or early this week? I can't even remember.
This week, I believe.
This week. But an expedited appeal does not mean by next Fed meeting. It probably means by Thanksgiving.
Yeah, the next Fed meeting is in 6 days. To be 5 days, and the press conference is in 6 days.
So I suspect that the Supreme Court will likely have a ruling out on this before year-end, probably before Thanksgiving. But Cook will be at that Fed meeting, and also potentially present is Stephen Barron, who was on the Council of Economic Advisors for the president, but was put forward as the replacement for Kugler. What was that, about a month ago, I think, when Adriana Kugler decided to step down? And so he cleared the Senate Banking Committee yesterday and potentially could be confirmed by the full Senate in the next couple days. And so it sets the stage for a widely expected 0.25% cut, with the interesting possibility that you could see dissents to both sides for the first time that I can remember on this.
Yeah, so we talk about this. I think it's worth an explanation again. This is a 12-member voting committee. They almost, what would you guess, like 90% of the time act unanimously?
It might even be more than that.
So most of the time, the vast majority of the time, they vote unanimously on which direction to go. The last two meetings, you've had dissents pushing for lower interest rates. At this meeting, to your point, Chuck, which would be incredibly abnormal, would be you clearly have some voting members that want rates to go lower and perhaps even more than 25 basis points. And then I think they're likely, to your point, are some folks that are looking at this inflation data and saying, I'm not so sure. I don't know, though, Chuck. I tend to think that you don't have anyone on that committee that is going to be so firmly stuck to keeping rates right where they are right now that they would dissent to the upside. But we'll have to see.
I don't know. I mean, here's the thing. Even though last segment I said I think the Fed it can completely justify cutting a 0.25% right now because the labor market's worsening while the inflation picture, you could make a case, is kind of just stagnating out there.
Yep.
I think that there's room for someone who says, yeah, these two risks are still both out there, and given the potential for labor supply disruptions, there's a chance that you might not see the unemployment rate move up much further from here. And so you could be justified in saying, I don't want to do anything.
Yeah, you could.
The point that you make, and that I think you kind of get from Powell from his Jackson Hole speech, is when Powell gives the go-ahead to move in a direction, usually he's pretty good at corralling the rest of the committee.
Mm-hmm.
And so the signal from August in that Jackson Hole speech is, guys, it's time to go. And so I think given that, it would be surprising to see a dissent saying, yes, I don't want to cut rates now. It's not impossible, but it's a lower likelihood.
The other counterpoint to my own perspective on this is he undoubtedly has less ability to corral today given his longevity compared to a couple years ago. And so you're right, there's going to be more willingness to dissent, I think, and that could take place on either side here. Most recently, the dissents have been towards lower rates, but as Powell's influence wanes here in the last few months of his role as chair, we could see that happen. The interesting thing, too, Chuck, on the bond side, we now have that 10-year down below 4%. The first time that's happened since April 4th, right on the cusp of the tariff announcements when markets freaked out. Wonder if you have a take on the precipitous drop that we've seen in that 10-year benchmark over the course of just the last week or so.
It's all about jobs, and it's basically, hey, if the Fed's saying that they're going to go and if the labor market's weakening, we got to fix that first before we worry about inflation, is what the bond market is saying.
Right.
Whether that is right or wrong, we're going to find out over the next year. That's not one that I think you call a win by year end. I think it's one where, hey, you're going to have to see how this evolves by next year, because if the economy does bottom in the next few months and starts to reaccelerate, and now you're saying, okay, like jobs growth is picking back up again, inflation's still running, 3 to 3.5, and nominal growth is heading towards 6, that 10 year is dramatically overpriced then.
Right.
If you have a deeper recession that goes for a little bit longer, okay, you could probably justify it, but there are a lot of eggs in the basket right now for, rates are going to be lower for longer. And I'm not saying it's right or wrong. I don't know. But by the end of next year, we're going to find out. I mean, look, if the 10-year is still below, I'll give some wiggle room on this. If the 10-year is below 4.5 at the end of next year, then this bond signal is the right one.
Right.
If it's above 4.5, then, oops, it's basically saying, hey, we didn't need to cut that much because this was a short-term wiggle in the economy and not a real recession. Let's take a quick break here. When we come back, I do want to talk more about Oracle from yesterday, just a monster day, and so we'll talk about what they're doing today and what it means after this.
Text us 617-362-1385 with your comments and questions about today's show. This is the Financial Exchange Radio Network.
Mark Vonner is the CEO of Veterans Development Corporation. Mark is a career military man, having served for nearly 20 years, and we are so thrilled to have him and his company as a key partner and the presenting sponsor of the DAV 5K Boston. Mark comes from a proud military family, including his father Victor and his brother Timmy. Mark talks often about how serving his country was one of the greatest achievements of his life, and that's one of the key reasons that he chooses to give back to this special community. Mark is honored to continue his legacy that his father started when he built Veterans Development Corporation. Working to help many disabled veterans and their families has become a lifelong goal for Mark, and it's why he's taken the time to fully support the DAV Department of Massachusetts. You can join Mark Vonner and Veterans Development Corporation and help our great American heroes today by making a donation or becoming a sponsor. Simply visit dav5k.boston. That's dav5k.boston.
Your retirement savings and life insurance benefits are more than numbers. They're part of the legacy you've worked hard to build. And with the right plan, you can help protect them for the people you love. This month's free guide from Cushing & Dolan, IRA and life insurance planning, estate tax strategies, and nursing home protection shows how naming your estate the beneficiary of your IRA or life insurance can help reduce estate taxes and protect assets from nursing home costs, and still give your spouse access when it's needed most. It's a straightforward strategy that can provide lasting benefits for you and your family. You'll learn how this approach can fit into your overall estate plan and why it may offer more flexibility than other options. Get your free copy today by calling 866-848-5699. That's 866-848-5699. Or request the guide online right now at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Artificial intelligence is changing the way companies invest and how markets move. Add to that global trends like international outperformance, a weakening dollar, and shifting bond yields, and you've got a complex landscape for investors. This is Mike Armstrong from the Armstrong Advisory Group, and we're hosting 2 financial seminars this fall to help you understand what it all means. Join us at Margaritaville Resort, Cape Cod on October 9th, or at the Showcase Superlux in Chestnut Hill on October 16th. Call 800-393-4001 to reserve your seat. We'll talk about how diversification and preparation may help you navigate uncertainty so your plan is ready. Don't miss this chance to get a clearer picture of your financial future. Register today by calling 800-393-4001 or on our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
Alrighty, so let's talk a little bit about the company known as Oracle. So they reported earnings on Tuesday, and as part of that, they talked about future commitments for purchases from their customers. And specifically, like the term that gets used when talking about this is RPOs. Now, this is not, if you're a football fan, this is not the run-pass option, so I don't want you to get, all excited about that. This, we're talking about remaining performance obligations. And RPOs, just so that you're aware of this, they are not guaranteed revenue. And this is the direct quote from Oracle. They represent the total value of contracted revenue that has not yet been recognized, often tied to future performance obligations. And so if you look at Oracle's RPOs over the last couple of years, they had risen from around $66 billion in November of 23 to $138 billion in May of this year, and then just jumped in one quarter to $455 billion. This is all because of the Stargate deal between Oracle and OpenAI for $300 billion in cloud contracts that Oracle is going to deliver to OpenAI over a 3 to 4 year time period. Which is all well and good. I'm not saying that it's not. I'm just saying a couple of things on this. The first is that when we look at this, there are a couple different things that you have to remember. The first is OpenAI does not have any cash of its own just sitting around to pay this. They don't.
True. Yep.
They rely right now on a bunch of funding in order to actually pay their bills. So they don't just have like $317 billion. Their cash flow is not $317 billion. Their revenue run rate is not. Like they don't have this money there. So the first question that you have in terms of, hey, how ironclad is this is, hey, can OpenAI actually, pay this? The second one is, will OpenAI actually pay this? Yes, they may have signed a contract to do so, but we see companies change their plans for construction all the time. Look at all of the car companies that were going to be building EV plants and decided, we can't sell that many EVs. We don't need to actually do this. And they changed their mind and delayed them and so on and so forth. The other piece on this is no one asked or even seemed to care on the conference call, hey, what's the return on investment going to be here? Okay, you're going to be, getting $300 billion in contracts. What's it going to cost you in order to actually build that and deliver it? What's the ROI on it? And so these are the reasons why, in my opinion, that Oracle stock, since its big jump yesterday up to $345 a share, it's back down today to around $310. So it's given back 10% in a 24-hour period. It obviously still has a massive gain there, but you look at this and you say, okay, there are definitely some questions that need to be answered here, and also this is not actually new spending that no one knew about. It's just it finally reached the stage where it was formal enough that Oracle could put it on their earnings report.
Yeah. It's not the only giant move that kind of has people scratch. I don't know if it has people scratching their heads, but it is just another comparison point that you can pretty easily make to the late 90s. And I know that those are getting drawn out and many of those comparisons being made, but I just see it over and over again.
And let's look, if we're going to make comparisons to the 1990s, then let's make comparisons to the 1990s. Oracle in the 1990s had an accounting scandal directly related to revenue recognition. Like they had a problem related to this. They had, settlements with regulators related to how are you recognizing revenue and what's going on here.
Folks, the markets have been inexorably tied to what's been going on in the artificial intelligence space. And that has made a lot of sense for quite some time. And it is truly contributing to real development in the economy. When we talk about deals like this one with Oracle or other types of providers, we are talking about real dollars invested and real infrastructure put into the ground. All of that having been said, this excitement is drawing many comparisons to the 1990s, the dot-com boom, and then that following bust cycle. And we are not the only ones making those comparisons. I want to talk to you all about a two-part live broadcast of this show with a seminar from the Armstrong Advisory Group that we are doing this fall. 2 locations, 2 separate dates, and limited time to sign up for these seminars and live broadcasts. One of them is going to be down at the Margaritaville Resort on Cape Cod. That's on October 9th. The other will be at Showcase Superlux in Chestnut Hill on October 16th. Again, October 9th, October 16th. I'm going to give you the number where you can get more details. But if you are staring down this market and economy and wondering, hey, how could this develop at the next stage and what might that mean for me and my financial strategy, these are the dates for you. This is the event for you. Call us at 800-393-4001 to register and reserve your seat at our 2 separate seminars and live broadcasts. Again, October 9th or October 16th. To get more details, go to armstrongadvisory.com or call us at 800-393-4001 now to reserve your seat.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Mike, do we want to talk about tech stocks are doing so well that investors are starting to worry, or IPO mania?
I feel there's a little bit more meat on the IPO bone.
Talk to me.
We have seen now, I mean, it's been a relatively few, but how many do we have scheduled now in terms of AI and tech-related names, or frankly, even names that aren't terribly related to AI who are just trying to take advantage of the moment here, pushing into the publicly traded market? And a few years ago, this was not universally taken with open arms, but it seems to be a little bit more in terms of excitement about it over the course of the last few months. Would you agree on that trend line?
Yeah, I think so.
In and of itself, probably not a concern. But again, one more quiver in the, or arrow in the quiver of those making the comparisons to that pre-.com moment.
The question, as you always have to ask then, is this 1997 or 2000? You know, it's
or neither, right? Like, you know, is it all over?
Like, if you think we're heading towards a bust,
yeah.
Then remember, like the dot-com bubble went on for a long time. I mean, it wasn't just something where you were like, "Hey, we had 2 good years and it fell apart." It was half a decade, and this puppy, quite honestly, just got started 2.5 years ago.
Yeah.
And who's to say it can't go on longer or morph into something else? And, you know, I'm not saying that this is going to go up forever because, like, stocks always have pullbacks at some point because something happens. But I do think it's important to recognize, hey, this has been a really resilient market all year. And there have been a number of challenges, even in the last month or two, that haven't really gone anywhere for it. It's like every time we say, oh, gee, like this looks a little dodgy, it's a couple days, and then that's kind of it. And that's where we are right now with markets. It won't stay that way forever, but it's where we are today. Quick break, hour 2, coming up in a bit.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of of your medical conditions as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine, no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense. Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM. Concord, Boston, the Money Matters Radio Network.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
This fall, why just watch the leaves change when you could watch the sunset over turquoise waters? The U.S. Virgin Islands are your perfect fall escape. Set sail on the sparkling blue sea, snorkel colorful reefs, kayak through calm lagoons, or try to reel in the big one with world-class sport fishing. Then, explore Charlotte Amalie, the capital of St. Thomas, with its historic streets and duty-free shopping. Ferry to St. John's Virgin Islands National Park for hiking and secluded beaches. And finally, experience the culture, festivals, and rum of St. Croix. 3 incredible islands, countless experiences, and something for everyone to enjoy. With easy travel from New England, no passport required for U.S. citizens, and no money to exchange, paradise is closer than you think. So why wait? This can be the season you fall naturally in rhythm with the heartbeat of the islands in America's Caribbean. The U.S. Virgin Islands. Plan your getaway now at visitusvi.com. That's visitusvi.com.
Mark Vonner is the CEO of Veterans Development Corporation. Mark is a career military man, having served for nearly 20 years, and we are so thrilled to have him and his company as a key partner and the presenting sponsor of the DAV 5K Boston. Mark comes from a proud military family, including his father Victor and his brother Timmy. Mark talks often about how serving his country was one of the greatest achievements of his life, and that's one of the key reasons that he chooses to give back to this special community. Mark is honored to continue his legacy that his father started when he built Veterans Development Corporation. Working to help many disabled veterans and their families has become a lifelong goal for Mark, and it's why he's taken the time to fully support the DAV Department of Massachusetts. You can join Mark Vonner and Veterans Development Corporation and help our great American heroes today by making a donation or becoming a sponsor. Simply visit dav5k.boston. That's dav5k.boston.
This month's free guide from Cushing & Dolan is called IRA and Life Insurance Planning, Estate Tax Strategies and Nursing Home Protection. Learn how naming your estate a beneficiary can reduce estate taxes, protect assets from nursing home costs, and avoid the 5-year Medicaid waiting period. Call 866-848-5699 to get your free guide today, or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we've got a guide available this month on the topic of inflation and your retirement plan. Mike, a lot of people listening might be familiar with the idea of the Consumer Price Index, the CPI, but rare is it that we find someone whose own personal rate of inflation exactly matches the CPI consistently.
Of course, we all have different spending habits. We all live in different parts of the country and have different effects of inflation. But I think a great example here, Chuck, is during a large portion of the 2010s decade, CPI was relatively in control and people got very little in the way of increases on their Social Security. However, healthcare inflation was pretty hot, and Medicare prices went up pretty dramatically during that period of time. And that is one area that dramatically affects retirees that doesn't play into CPI all that much and resulted in people seeing their Social Securities just not growing a whole lot during that 2010 decade. And so you really do have to evaluate the risk of, hey, here are my spending categories, and how might things like changes to the labor market or changes to energy markets, if I live here in the Northeast and I can't get natural gas and I'm instead relying on oil prices, how could those changes really affect my future finances?
Folks, our guide this month is titled Inflation in Your Retirement Plan, and the way to request it is by calling 800-393-4001. You can also request it online at armstrongadvisory.com. The guide again is Inflation in Your Retirement Plan, and that phone number to call is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Chuck, Mike, and Tucker with you, and we've got another broad-based rally taking place today, taking stocks to new all-time highs on the S&P 500, which currently sits at 65.77, up another 45 points today. The NASDAQ also finally notching another all-time high. It had been unable to, even with the, at least on an intraday basis, it had been unable to over the last couple of days, but finally has gotten there now. And so the NASDAQ up 0.6%, 131 points. And last but certainly not least, the Dow Jones Industrial Average is up 537 points, about 1.2%. So again, all three major U.S. indices moving on up. Despite a hotter than anticipated headline inflation report and inline core inflation data, you've actually got bonds moving down for yields today. The 10-year Treasury right now down 1.3 basis points to 4.019%. This because we got a worse than expected weekly jobless claims report for initial jobless claims, which moved up to 263,000 from 236,000 in the prior week. And so markets acting a little bit nervous and skittish on that side of things right now. When we take a look at commodities, we've got oil down $1.15 a barrel to $62.52, and we've got gold down $14.60 an ounce to $36.67, and those are the major moves taking place inside U.S. markets today. Mike, anything you want to add there?
I just wanted to contextualize one thing that's been getting a fair bit of press coverage, not price coverage, which is where the S&P sits in terms of its valuation. And it is true that from a number of different metrics, it is the highest that it has ever been. Specifically, the one that people have been looking at is that price to sales ratio, which looks at, hey, what is the price of the S&P 500 compared to the gross sales of the businesses that comprise it? The piece that has not hit those same all-time highs is the price to earnings ratio. That is still pretty well below where we were in the peaks of the dot-com bubble, and really speaks to one main piece of information here, which is that the companies today that are getting bid up are far more profitable than those that were during the dot-com bubble. It does not mean that there weren't companies that were. There are plenty of companies that were very profitable back in the late 90s that were also seeing their stock prices go high, but there were a far larger number of those that were very unprofitable, very little revenue, that we're seeing their stock prices being bid up. And so a key difference there, but still worth noting that, when you look at the price you're paying for stocks compared to the total revenue that those companies are generating, while that revenue is far more profitable, it is an all-time high.
Piece from Market Watch. Incomes rose and poverty fell last year, so why do so many Americans feel tapped out? This on a new look from the Census Bureau. They do an annual study on Americans' incomes each year. It usually comes out right around this time. It's called Income in the United States. I mean, great title, obviously. 2024 is the part that I left off there. But, Mike, when asking this question, I don't think it's very hard to get there in terms of, okay, median income went up. And I went through the whole report, which it's not too long. It's 58 pages, but it's not like overly dense. There's a lot of charts and things like that there. And I think that the things that I take away on this, median income went up by 1.3%, which is fine. The pace of inflation was steep in the last, not steep, but, again, inflation was running 2.5%, 3%, somewhere in that ballpark. And in particular, for those that are lower income earners, when you look at lower income households, hey, if you were struggling before, it's not like there was anything last year that suddenly gave you a huge leg up.
Right.
You still are struggling pretty significantly, and this is all assuming that we're actually getting accurate reads on inflation and things like that, which does not affect every group the same way. You have, lower income groups. Hey, we just saw food prices take a jump last month. A bigger portion of, lower income household spending goes to food than if you were making, $150,000 a year. And so I don't think it's surprising that a lot of people are saying they're tapped out, even though incomes did go up a little bit last year.
Yeah, and it goes back to really a theme that we've been covering now for a good 3 years, which is those with high incomes and typically own big assets, whether it's their home, their 401k, or other types of similar assets, and those asset prices have gone way up over the course of the last 2.5 years. If you don't own assets, if you rent and you make below the median national income, you're seeing prices continue to go up, your wages just barely covering the increases, and not seeing any of the benefit of home values and 401k values going up. And so, Yeah, I guess I'm with you, Chuck. I'm not terribly surprised that when you poll Americans about how they're feeling about things, it's not overly optimistic.
Other things, like if you look at groups that are not doing well, and the Census Bureau does a great job of breaking this out with the different demographic breakdowns that they give here. So here's some different groups that aren't doing well last year. And again, these are, I just want to clarify, all of these are in inflation-adjusted terms. So it's all in 2024 dollars. It's already been adjusted in terms of inflation. If you look at households where a black household member is the primary household member, their incomes last year fell by 3.3%. Kind of hard to say that you're doing well if that's the case,
Sure.
correct?
Yeah.
If you look at households where the primary household member is age 55 to 64, which is 23 million households, their incomes fell by 1.5%. If you look at households in the Midwest, 28 million households, and look, there's overlap in this, so like, I don't want you to think that like this is going to end up being everyone, but Midwest saw incomes fall by 1.1%. If you look at residences that are outside metropolitan statistical areas, so rural residents, their incomes fell by 0.6%. If you look at folks with no high school diploma, about 9.5 million households have a head of household that fits that category. Their incomes fell by 1.8%. So you can very easily get to a point where you say, hey, they're probably somewhere in the range, when you include overlap in this and that, out of 132 million households, there's probably a quarter to a third of them that still saw their incomes fall relative to the year prior.
Right.
That's why a lot, like right there, like that group is saying, yeah, things aren't good. There's another group that is in there saying, hey, my income barely changed, and so they might just feel worse because I made more, but it all went to paying for the same stuff anyways. And so I don't think it's surprising that you get 40 to 50% of people saying, yeah, like this is really hard right now. It's because it is.
Yeah. Yeah, again, these numbers, at least they used median here when looking at these details, but even when you look at that, it is tough for a large portion of people, especially over the course of, when you look at this over the course of 4 years with the disastrous inflation of 2022, you put together a pretty compelling story of American families struggling, which is especially concerning because it's happening at a time with 4.3% unemployment. You imagine where that goes if we're sitting at 5% unemployment instead, and then you have a really tough series of problems, which is why the Fed is so focused on it.
Correct. Exactly. So let's take a quick break here. When we return, I want to touch on what is going on in the housing market as mortgage rates have come down, and we'll also do a little bit of trivia right after this.
The Financial Exchange is live on SiriusXM's Business Radio Channel 132, weekdays from 11 to noon. Get the latest business and financial news from across the country and around the world, and keep up to date on how it might affect your wallet. That's the Financial Exchange, weekdays from 11 to noon on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network. This fall, why just watch the leaves change when you could watch the sunset over turquoise waters? The U.S. Virgin Islands are your perfect fall escape. Set sail on the sparkling blue sea, snorkel colorful reefs, kayak through calm lagoons, or try to reel in the big one with world-class sport fishing. Then, explore Charlotte-Amalie, the capital of St. Thomas, with its historic streets and duty-free shopping. Ferry to St. John's Virgin Islands National Park for hiking and secluded beaches. And finally, experience the culture, festivals, and rum of St. Croix. 3 incredible islands, countless experiences, and something for everyone to enjoy. With easy travel from New England, no passport required for U.S. citizens, and no money to exchange, paradise is closer than you think. So why wait? This can be the season you fall naturally in rhythm with the heartbeat of the islands in America's Caribbean. The U.S. Virgin Islands. Plan your getaway now at visitusvi.com. That's visitusvi.com. Every dollar you've saved in retirement accounts and life insurance tells a story of hard work, smart choices, and the future you envision for your family. One way to help that story end well is to make a beneficiary choice that does more. This month's free guide from Cushing & Dolan, IRA and Life Insurance Planning, Estate Tax Strategies and Nursing Home Protection, explains how naming your estate as the beneficiary of your IRA or life insurance can add a layer of tax efficiency and nursing home protection, while still allowing your spouse access when it matters. It's about keeping more of what you've built working for your loved ones now and in the years to come. Get your free copy today by calling 866-848-5699. That's 866-848-5699. Or you can request it online from our website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Artificial intelligence is changing the way companies invest and how markets move. Add to that global trends like international outperformance, a weakening dollar, and shifting bond yields, and you've got a complex landscape for investors. This is Mike Armstrong from the Armstrong Advisory Group, and we're hosting 2 financial seminars this fall to help you understand what it all means. Join us at Margaritaville Resort, Cape Cod on October 9th, or at the Showcase Superlux in Chestnut Hill on October 16th. Call 800-393-4001 to reserve your seat. We'll talk about how diversification and preparation may help you navigate uncertainty so your plan is ready. Don't miss this chance to get a clearer picture of your financial future. Register today by calling 800-393-4001 or on our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Text us at 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we are covering. This is the Financial Exchange Radio Network.
All right, time for trivia here on the Financial Exchange. On this day back in 1977, the Atari 2600 was released in North America, revolutionizing the video game industry. Atari sold 30 million units of the 2600, which was a record until the Nintendo Entertainment System came onto the scene in the mid-1980s. So our trivia question today is simply, what is the best-selling video game system of all time? Once again, what is the best-selling video game system of all time? Be the 4th person today to text us at 617-362-1385 with the correct answer. And you win a Financial Exchange Show t-shirt. Once again, the 4th correct response to text us to the number 617-362-1385 will win that t-shirt. See complete contest rules at financialexchangeshow.com.
Mike, what we've seen in the last several weeks is the national average for a 30-year fixed-rate mortgage has gone from, throughout most of August, hanging out around 6.5, 6.6%, now down to around 6.25%. 6.29 is where we currently stand today. And if you go back just a little bit earlier in the summer, mortgage rates were kicking around, anywhere in the 6.75 range for much of June, July. And so you got, anywhere, depending on when you were looking, from 0.25% to 0.5% improvement in mortgage rates. And so, unsurprisingly, what we saw yesterday was the MBA Mortgage Applications Index was up 9.2% for the week. Most of this concentrated in refinance activity, but a jump in purchases as well that we saw. And so I think that when you look at this, it clearly is having some impact on the margins here. The question is it big enough, and where are those, marginal sales and applications taking place? Simply because we are in an environment where home prices have been sliding over the course of the summer, and does this do enough to stem the tide there? The other question for the, to continue this incredibly long run-on sentence is one of the things we've seen in the last couple of weeks has been a bunch of sellers pulling properties off market because they can't get the prices that they want rather than moving through with price cuts. Do lower rates draw some of that inventory back out, and does that extra inventory then put more downward pressure on prices as it returns to the market?
Yeah, all interesting questions. I mean, the refinance activity is going to be real, and I believe that will trend upwards.
And it's good. It's great for the economy.
It's good for the economy. It's not a purchase, right? Let's separate the two. Like, yes, it frees up some cash flow for the homeowner. They can spend some of that discretionary income elsewhere. But obviously, when you talk about somebody buying a new condo in Florida, the amount of economic activity that occurs from something like that compared to the refi are very different. And not a problem, but the problem with the timing here really is we're heading into a very short housing season here. Basically, if you don't have your home sold by Thanksgiving, then it ain't going to sell until next spring in a lot of cases. And so, do we have time to see any sort of uptick in sales, new buyers re-entering the market with these mortgage rates? It is a pretty serious drop in rates here and increases buying power. But will it stick around until next spring? That's if we're going to see an uptick in activity, that's when I would expect it to come.
Yeah, so I think that ultimately can rates stay in this range, or can they get back to this range, 5-6 months from now?
Right.
Like it doesn't really matter a ton if interest rates are low Christmas week. No one buys a house then.
Right. Irrelevant.
It's like the volume of sales is less than half of what it is during the peak spring period.
Mm-hmm.
So can you get rates in this range somewhere in, starting Super Bowl, first week in February? Get them in this range first week in February through July 4th? You got the potential to cook a little bit. There still is a lot of inventory that needs to burn off, and there could be more that comes on next year as well. So these are things that, just that I think about as we look at where the housing market could be. But lower rates, obviously going to provide some support to home prices, and so potentially good news for sellers and buyers to being able to match up a little bit more easily then.
Yeah.
Let's see. We want to talk about reverse stock splits?
Not particularly, do you?
No, let's skip that one.
Okay.
Do we want to think about how many people think retirement will take a miracle?
Fewer, apparently, think that will take a miracle. So is this the least surprising story of 2025? Hey, stock market's at an all-time high. Therefore, fewer people think they're going to be devastated in retirement.
Yes, stocks have done north of 20% the last 2 years and more than north of 10% so far this year. And so, yeah, it's not surprising that if you have a few good years of returns, people are going to feel more optimistic about their ability to retire.
That said, the interesting thing that you mentioned earlier, Chuck, during the last segment on the labor market, that, what did you say, 55 to 64 cohort in terms of their incomes moving downwards?
Yeah.
That's, well, one, something that I think everyone has seen and experienced, right? How many people know somebody, a family member, a friend, who has lost their job at that stage of the game and had a very difficult time finding new employment because of ageism. Like that is something that I see very, very frequently. So not entirely surprising, but I guess it would certainly affect my comfortability with retirement going well if I lost my job at 57 years old and had been planning on several more years of employment.
Sure, especially because it's two-sided coin there. It's you lose the income, but you also have more expenses because now you got to cover things like health insurance and stuff like that while you're out of work. So these are some of the things that are challenging, kind of as you look at that question there. Other things, just other pieces from this survey from Natixis. Americans overall expect to retire at 64. Was there a survey that we covered a couple weeks ago that said Americans thought they could retire at 62, or am I making that up?
I think the survey was that most said they wanted to retire at 62, not that they thought they would be able to financially retire at 62.
Got it. Baby boomers who have not yet retired but plan to do so at 70. I'm just looking at the demo for baby boomers, and the youngest ones, I believe, go through 1964, which means they're 61 right now. And so basically the ones that are left are, the average age is probably 65, 66, below that are not retired. And so, they're basically saying 3-4 more years on average kind of gets you, into that range. That clicks and that kind of meshes with what we're seeing overall. All generations expect their retirement to last an average of 22 years. So retire at 64, live to 86. Life expectancies aren't quite that good.
No, they are not.
Even though I wonder what life expectancy at age 64 is. I'm pulling it up right now because, remember, it changes. In the U.S., it looks like men can live on average 18.2 more years, women 20.7.
So close.
22 is not too far off, actually. Yeah, that's not crazy when you look at it. Let's take a quick break. When we return, we've got the trivia answer, we've got Wall Street Watch, and we're talking bond yields.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. One of the biggest risks to retirement isn't just market volatility, it's longevity. People are living 25 to 30 years after they stop working, and that gives inflation plenty of time to work against you. At just 3% inflation, your expenses double in about 23 years. Add to that the fact that healthcare costs typically rise faster than general inflation, and your later years could be your most expensive. Without a plan, that combination can put real pressure on your savings. That's why we've put together a brand new guide called Inflation in Your Retirement Plan. The guide shows you ways to balance longevity risk with rising costs and strategies that may help you make your money last through decades of retirement. Call 800-393-4001 to get your free copy today. 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. This fall, why just watch the leaves change when you could watch the sunset over turquoise waters? The U.S. Virgin Islands are your perfect fall escape. Set sail on the sparkling blue sea, snorkel colorful reefs, kayak through calm lagoons, or try to reel in the big one with world-class sport fishing. Then, explore Charlotte-Amalie, the capital of St. Thomas, with its historic streets and duty-free shopping. Ferry to St. John's Virgin Islands National Park for hiking and secluded beaches. And finally, experience the culture, festivals, and rum of St. Croix. 3 incredible islands, countless experiences, and something for everyone to enjoy. With easy travel from New England, no passport required for U.S. citizens, and no money to exchange, paradise is closer than you think. So why wait? This can be the season you fall naturally in rhythm with the heartbeat of the islands in America's Caribbean. The U.S. Virgin Islands. Plan your getaway now at visitusvi.com. That's visitusvi.com.
Mark Vonner is the CEO of Veterans Development Corporation. Mark is a career military man, having served nearly 20 years, and we are so proud to have him and his business as a key partner and a presenting sponsor of the DAV 5K Boston. The DAV Department of Massachusetts does incredible work, and it's one of the first organizations that Mark became familiar with after his military service ended back in 1984. As Mark built his company, he knew he'd be giving back to fellow veterans who needed jobs, support services, medical supplies, and so much more. Mark works with disabled veterans every day, and it's one of the key reasons why he's such a big supporter of Dan Stack, the DAV Department of Massachusetts, and the DAV 5K Boston. You can join Mark Vonner and his team and make a donation to the DAV Department of Massachusetts or become a sponsor of the DAV 5K Boston. Simply visit dav5k.boston. That's dav5k.boston.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke, a partner with the law firm of Cushing & Dolan with a master's in taxation. And today we're talking about choosing beneficiaries for your IRA. Todd, what is the best way to set up designated beneficiaries for qualified plan assets from both a Medicaid and estate tax planning perspective for a married couple?
Generally, for a married couple, you have several choices. The most commonly used one is you're going to make the surviving spouse the designated beneficiary. It doesn't shelter assets from estate taxes. It just passes to the surviving spouse. It avoids probate, and it's probably the best way to go from an income tax perspective, not necessarily an estate tax perspective. Another way would be you could technically name the trust the beneficiary of the IRA when you pass. That at least will help it shelter assets for estate tax purposes and still provide for the surviving spouse. But from a Medicaid perspective, it will then protect it from the nursing home, but it'll take 5 years. Perhaps the newest and best way to do this would be to name the estate the beneficiary, provided you are over age 73 or over. That way, it goes through probate into the will. It is sheltered for estate taxes. It is immediately protected from the cost of long-term care for the surviving spouse, and the surviving spouse has access to it as well.
Educate yourself about the estate planning process. Request your free copy of Todd's brand new guide, Why Name Your Estate an IRA Beneficiary, right now by calling 866-848-5699. That's 866-848-5699. Or you can request a copy from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, markets are in rally mode as Wall Street digests a key inflation measure posted earlier this morning, where the consumer price index increased 2.9% on an annual basis, in line with expectations, yet hotter than July's gain of 2.7%. Jobless claims also came in slightly above estimates. At the moment, the Dow is up by 1.3% or 592 points. S&P 500 is jumping 0.8% higher at 53 points, and the Nasdaq is up 0.7% or 150 points higher. Russell 2000 is also up 1.3%. 10-year Treasury yield down 1 basis point. It is now at 4.017%, and crude oil down nearly 2% lower, trading at $62.55 a barrel. Well, after its best day since 1992 on the heels of its optimistic AI revenue projections, Oracle shares are slightly retreating from yesterday's 36% surge, down just over 2% today. Separately, Wall Street Journal reported it struck a $300 billion cloud deal with OpenAI. Meanwhile, recent meme stock Opendoor is now soaring 64% after the online housing platform named a top Shopify executive as its next CEO. Elsewhere, after its 3% pullback yesterday following its underwhelming product event, Apple shares are up about 0.8% today. After a successful IPO yesterday, where shares jumped 14% in its debut, shares in buy now, pay later platform Klarna are now down about 0.5% today. Kroger up about 2% after the grocery store chain posted mixed quarterly results where it beat earnings expectations but fell short of revenue estimates. And Chewy up 2% today following its 16% plunge yesterday after the online pet products retailer reported a steep year-over-year drop in earnings. Deutsche Bank, however, upgraded the stock, saying the company continues to drive meaningful industry share gains and sees an acceleration in revenue growth next year. I'm Tucker Silva, and that is Wall Street Watch. And in the previous segment, we asked you the trivia question, what is the best-selling video game system of all time? That would be PlayStation 2. Sony sold over 160 million PS2s, a record that stands 25 years later. Mark from Haverhill, Mass. is our winner today, taking home a Financial Exchange Show t-shirt. Congrats to Mark. We play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
I had to look up what that thing looked like. I remember owning one.
Oh, I remember that, yeah.
I had to go
know
look
exactly
it up.
what it looks like, and I didn't even own one.
Yeah. Okay.
Do you know what the best-selling game for the PS2 was?
I would have to guess Resident Evil or Metal Gear Solid, something like that.
Metal Gear Solid 2 is number 4.
Okay.
One of the Grand Theft Autos?
Correct.
Yeah.
Any idea which one?
Vice City.
Nope.
3.
4.
San Andreas.
Oh, San Andreas.
San Andreas. 17.33 million units sold of that for the PS2. The next two are going to surprise you, quite honestly, just because this isn't the world we live in anymore. The next two biggest selling games for the PS2 were Gran Turismo 3 and 4.
Oh, those are sneaky big for Sony, yeah.
They were, but when's the last time a racing game has been that big?
Yeah.
Like, it feels like it's been a while, right?
Yeah.
So,
let's
I
be
found that
honest.
interesting.
We're all a decade removed from the gaming systems lifestyle, so I don't know what's cool
I miss
anymore.
it dearly.
A decade might be nice. Honestly, the last gaming console I bought was in college, so like we're talking like 25 years.
Yeah.
You know, like it's been a while.
Yeah.
But what are you going to do?
Yeah.
Time marches on.
Quarter century, you mean?
Don't say that.
I like measuring things that way.
Don't say that. Let's talk a little bit about this piece from Barron's. Bond yields are falling, where retirees can still find 5% yields, and then it's got a picture of a suitcase with a whole bunch of international stickers on it, Michael.
So are they saying buy Brazilian bonds to do that?
Carry cash in a suitcase? I don't know. Like, what does one do when you can't find 5% yields anymore?
Yeah. Well, I'll tell you historically what people do, and sometimes to somewhat disastrous results, is they tend to go down the credit scale when searching for higher yields in a lower interest rate environment. We saw this for a lot of the 2010s. I haven't seen as much of it recently, but I distinctly remember meeting with somebody, don't remember exactly what year, but somewhere in the 2010s, and they were kind of unaware that the entirety of their portfolio was invested in junk-rated individual bonds and what sort of risks those actually represented to them. But that is very oftentimes when you see narrowing spreads and the inability to go get that 4 or 5% CD anymore. A lot of folks do start searching around in terms of what those alternatives are, and very often, at least in my experience, owning things without fully understanding what it is that they are owning.
Yeah, even things that might seem, stable. You might be like, I found a bond for my local utility company, but you don't realize that the covenants have it being tied to, a certain plant being open, and that plant is in the process of closing.
Or very frequently, those same bonds being callable by the company or the municipality or the government agency if interest rates move down. And there's a lot of that's happened recently, too. You go get this 6% bond, and then 3 months later they call it back from you, and you're in a pretty rough spot. The more complicated stuff that I see, though, Chuck, like what I get worried about, we've covered how there are now more ETFs than individual stocks out there. There are many, many, many different types of funds that are purely dedicated to generating a very high, not necessarily interest rate, but dividend or interest rate. Yep. And they oftentimes employ very complex strategies, sometimes using leverage and options that I hate to say you have to do your homework and actually read the disclosure packets that they send you on these things, but you do have to do that if you're going to try and search around for this type of thing. So, just word of warning, if we do see rates come down and people start shopping around for those other types of things, they are complicated.
Hey, this fall, why just watch the leaves change when you could be watching the sunset over turquoise waters? Well, the U.S. Virgin Islands are your perfect fall escape. Set sail on the sparkling blue sea, snorkel colorful reefs, kayak through calm lagoons, or try to reel in the big one with world-class sport fishing. Then explore the Charlotte Amalie, the capital of St. Thomas, with its historic streets and duty-free shopping. Ferry over to St. John's Virgin Islands National Park for hiking and secluded beaches. And finally, experience the culture, festivals, and rum of St. Croix. 3 incredible islands, countless experiences, and something for everyone to enjoy. With easy travel from New England, no passport required for U.S. citizens, and no money to exchange, paradise is closer than you think. So why wait? This can be the season you fall naturally in rhythm with the heartbeat of the islands in America's Caribbean, the U.S. Virgin Islands. Plan your getaway now at visitusvi.com. That's visitusvi.com.
Mike, we also got a little bit of breaking news. The FTC announced a probe into OpenAI, Alphabet, Meta, xAI, and Snap to understand how their AI chatbots potentially negatively affect children and teenagers. This comes on the back of a couple stories that we've covered about the lax controls and rules for what kind of content AI chatbots can provide to children. And so this is something that I think, quite honestly, it's tough to say long overdue because these platforms haven't been around for that long. But I think it is good to see the FTC taking an interest in, should, Meta chatbots be having sexually explicit conversations with 13-year-olds? No, they shouldn't, and maybe we should look into this a little bit.
Seems like one that we can universally agree upon there. Chuck, to me, this, though, does come back to, I would very much welcome some rules and regulations for AI and how it interacts with children. To me, this all falls into one big question, which goes back to the same, what is the regulation that Facebook, Google, all these companies have relied upon in terms of protecting themselves from lawsuits? It's, do you have any idea what I'm referring to? It's the piece that basically provides them indemnity from somebody posting.
Oh, Section 232?
Yeah, Section 232, which effectively makes them not responsible for content.
I didn't realize you were looking for legislation. I thought you were just going to say, they're big and they throw their weight around.
No,
right?
the Section 232 specifically, I'm curious, does that apply to AI chatbots?
Actually, it's not 232. That's a section related to tariffs. Hang on. It's something.
Yeah.
Keep talking. I'll find it. There's a lot of sections out there.
So effectively what it provides, though, is if somebody posts something vile and dangerous on Facebook, Facebook's not responsible for policing it. They oftentimes do because they want to not freak people out and make
Section
them run away
230, not
Section
232.
Thank you. But they're not legally liable for it. My question is, does the same thing apply to an AI chatbot that you create?
The answer should be no.
It should be, but they're certainly behaving as though it does.
And if it isn't no, then the law needs to be amended because someone created, you can't just be it's this chatbot. Well, who built the chatbot? Well, we did. Who hosts the chatbot? We did. Then who's responsible? Not us.
Yeah, that is my question. And they will make the argument that, the content was created by the user. We just created the device that they can use to create the content. It's no different than somebody but that to me is an incredibly important question to answer, and I would agree with you. If it is not adequate to find them liable for this sort of thing, then it needs to be changed, because this is not the same as Facebook's lack of liability for something else.
Let's take a quick break here. When we return, we'll do a little bit of Stack Roulette.
The Financial Exchange is now available every day from 11 to noon on SiriusXM's Business Radio Channel 132. Stay informed about the latest from Wall Street, fiscal policy, and breaking business news every day. The Financial Exchange is live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
Are you wondering where the economy is headed? GDP is growing, but tariffs, inflation, and job numbers are making headlines. Interest rates, housing costs, and policy changes are impacting all of us. Even AI is changing how markets move. Hi, this is Chuck Zodda from the Armstrong Advisory Group. We're hosting 2 financial seminars this fall to help you make sense of it all. Join us at Margaritaville Resort Cape Cod on October 9th or at the Showcase Superlux in Chestnut Hill on October 16th. To reserve your seat, call 800-393-4001. We'll break down the economic trends, market risks, and smart strategies you need to plan for retirement and beyond. Diversification, preparation, and smart decisions are several of the keys to navigating uncertainty. Register today by calling 800-393-4001 or on our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Your retirement savings and life insurance benefits are more than numbers. They're part of the legacy you've worked hard to build. And with the right plan, you can help protect them for the people you love. This month's free guide from Cushing & Dolan, IRA and life insurance planning, estate tax strategies, and nursing home protection shows how naming your estate the beneficiary of your IRA or life insurance can help reduce estate taxes and protect assets from nursing home costs, and still give your spouse access when it's needed most. It's a straightforward strategy that can provide lasting benefits for you and your family. You'll learn how this approach can fit into your overall estate plan and why it may offer more flexibility than other options. Get your free copy today by calling 866-848-5699. That's 866-848-5699. Or request the guide online right now at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. This fall, why just watch the leaves change when you could watch the sunset over turquoise waters? The U.S. Virgin Islands are your perfect fall escape. Set sail on the sparkling blue sea, snorkel colorful reefs, kayak through calm lagoons, or try to reel in the big one with world-class sport fishing. Then, explore Charlotte Amalie, the capital of St. Thomas, with its historic streets and duty-free shopping. Ferry to St. John's Virgin Islands National Park for hiking and secluded beaches. And finally, experience the culture, festivals, and rum of St. Croix. 3 incredible islands, countless experiences, and something for everyone to enjoy. With easy travel from New England, no passport required for U.S. citizens, and no money to exchange, paradise is closer than you think. So why wait? This can be the season you fall naturally in rhythm with the heartbeat of the islands in America's Caribbean. The U.S. Virgin Islands. Plan your getaway now at visitusvi.com. That's visitusvi.com.
It happens all over Massachusetts. In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Cardiovascular disease is the #1 killer of women,
Taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
Stronger, more powerful.
We have each other.
When we come together and go red,
The more power we have against our greatest health threat. Visit GoRedForWomen.org today to learn more.
The Financial Exchange streams live on YouTube. Subscribe to our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
This year's DAV 5K is less than 3 months away, and slots are filling up fast. So if you'd like to participate, now's the time to register. The race is Saturday, November 8th at Castle Island, and you can visit dav5k.boston to sign up or join our team, Team TFE. Your support helps fund free rides to medical appointments for veterans in the nation's first DAV-led housing initiative, providing homes for single veterans and veteran families. Go to dav5k.boston and register today.
Mike, what do you got for me for Stack Roulette?
Online travel platforms getting afraid of artificial intelligence. And this one doesn't make a ton of sense to me, but I think maybe I use these platforms differently than other people do. Here's the concern. Booking.com, Expedia, Kayak, all of these companies that are probably all owned by the same company, I'm guessing. But they all rely upon you searching on their platforms in order to generate effectively commissions from the airlines and hotel companies when you book through their sites.
Sure.
If you can quickly tap into ChatGPT that you want flights on these specific dates and a hotel on these specific dates as well, and it pulls it all up and makes it easy for you to click through and book directly, then they're worried about their business model. I don't know that that's how younger generations book their travel, though. I mean, for me personally, I don't know how you do it, Chuck. I will go search the flight on something like Google Flights, and then I will oftentimes try to book it on something like Expedia because they provide rewards points that I can then use on other things. But otherwise, I don't use any of these third-party places to begin with as a starting point for my search. I suppose on hotels it's a little bit different. I do use it there. But I'm just not... I guess I'm not convinced that AI agents are a genuine threat to this business model entirely, but maybe everybody else is using it differently than me.
No, and I guess even on the AI agent side of things, would you really enable it to go and say, yes, I just want it to go and book stuff, or does it kind of do the legwork that you did, which is, hey, find me, selections because I want to do X, Y, and Z and fly to this place and stay, for this many days in this location, and then you go and you book the stuff yourself anyways.
Right, but I guess here's where it does dramatically reshape their businesses. If it does point you directly to the airline and directly to the hotel instead, then yeah, those business models are out, and they're gonna have to find something else that makes it compelling. For me, again, I have a credit card through one of these companies. I get rewards points.
What's the credit card number?
Yeah, hold on. I'll give you my social too.
6?
When does it expire?
What's your code on the back?
Your zip code, please, Mike. But yeah, I mean, if it does cut through that, then just like search, it is a genuine threat to the business. I don't know. I'm a little bit uncertain that that's going to be the case. And by the way, having used AI to plan parts of my most recent vacation, made a lot of mistakes, especially when trying to suggest hiking ideas.
Where did it want you to hike?
Well, we were doing hikes, but it just kind of invented trails that didn't really exist. Like, yeah, you can get from here to here. But if you actually go, take a look at that, you're like, oh, yeah, they just want me to ascend over a mountain that doesn't have a trail, so that's probably not going to work terribly well.
You didn't bring your crampons and ice picks?
No, we did not pack our ice picks.
Sorry to hear that.
Yeah.
What kind of vacation was this?
Yeah. Slacker vacation.
Seriously. I want to talk about SEPTA.
Good.
If you're not familiar with them, it's not actually related. Doesn't SEPTA sound like it should be like the sewer agency for a city?
Yeah.
In fact, it is the Southern Pennsylvania Transportation Authority, the 5th largest transit agency in the U.S. It is basically Philly's version of, whatever your city runs for buses, trains, and subways. And apparently they had a funding crunch, and so they cut one of the lines that goes to the Eagles Stadium. FanDuel stepped in and said, hey, we're going to pay $80,000 to restore service on game days so Eagles fans can get to and from the stadium using public transit.
Seems like some cheap advertising.
It sure does. And I'm trying to think of the different ways that this is problematic.
Oh, this is, to me, the least problematic thing that gambling companies are doing these days.
No, it is, but it's the idea that, hey, we've so devalued public transportation now that the only way to run the lines we want are for a gambling company that is sucking money away from the people on that train on a daily basis. They come in and they fund the thing.
So I know that this is a different scale, Chuck, but that's been the premise of the Massachusetts State Lottery and every other state lottery for 40-some-odd years now. And this is just
and
a
we can talk about the
continuation of
problems that you have with those too. Like,
yeah, I mean, Massachusetts has the worst or the highest average lottery money spent for any state in the country. Which
gotta spend money to make money,
which is problem, not what that means. But yeah, I just see this as a continuation of that. But I would agree with you that it is a much bigger problem than it was 30 years ago.
You know, and I'm not saying that you need to have, like, the only, like, advertising you should allow or sponsorship should be, like, wholesome. Like, we all have our things, but it's just like, man, the only reason this line is running is because we allow for you to place a bunch of bets on your phone now?
Yep.
I felt better about things in my life. Let's take a quick break here for the entire rest of the day. Back at tomorrow to finish up the week.